Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, May 1st, 2023. I'm Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. Right now, a very narrow range heading into the RTH Open. 33% of average here, a range of just 15 points. 1-5, one whole 15-point range going into the RTH Open. The market's been averaging about 40 plus points per day. On an average 10-day basis, but 55 on a 5-day basis. You can see right here, this is 1, 2, 3, 4. These last 4 days were super high volatility here, especially after these lower volatility days there. The first thing we're going to want to see is how price responds to the previous week's high and the previous month's highs. Any rejection there could open up a return back toward the midpoints of those respective ranges. The midpoint here being 41.30 or so, and then you also have the midpoint of the previous week's range at 41.31. So 41.32 here as the midpoint for the month. 41.31 is the midpoint for the week, right in that zone. So again, we could be looking at a quick return back within the developing, expanding range. 4,200 remains a big time level, though. That's the spot to watch in case we get a significant transition day through that zone. This is your 4,200 level that comes all the way across right here. If price were to get that big time transition day through there, it opens up this move up to 4,300 at the very least, with the potential to see even more strength ahead. So this edge is going to be very important as we begin the month. Also, as we turn the page to the new month of trading, we have new monthly pivots as well. Higher value relationship here for the new month with a bullish confirming bias. That means that any pullback into this midpoint could provide a buying opportunity for a continuation higher. A failure at this midpoint opens up the previous month's low price. All right, let's take a look here at the NQ. The NQ right now trading 44% of average range, 85 points of total range. This thing's been averaging about 186 points per day on a 10-day basis, about 200 plus on a 5-day basis. So again, the last 4 days, high range days, but we're now back at the upper end of last month's range. Very, very narrow range here that developed here over the course of the month. One of the most narrow ranges we've seen in a couple of years. And that is significant as we head into May, because May could then become a high range month. This is the case for the ES, the NQ, and the other equity futures as well. If you take a look here at this initial reaction at the previous month's high and the previous week's high, that right there could provide a quick rotation back within the range. Eventually, a breakout from this range will trigger quite the move here, likely north of 1,000 points, 1,200 points to 1,500 points of movement could be seen. So once we do get expansion from this range, it could be a significant move in the direction of the break. As of right now, kind of an impulsive move up to the top end of the range, keeping an eye on the previous month's high and close here. Any rejection at that point could open up a return back within the range until proven otherwise. All right, taking a look here at crude oil. This one's down over 2% here to begin the new month of trading and the new week of trading. This one had quite the decline here up ahead. It is also bouncing off the prior support as well. So this thing has been developing clean market structure. It started with a failure of that market structure up. That failure here opened up a rotation to the low end of that market structure, broke it down, created new market structure lower, broke it down, created new market structure lower. So this is the best spot here for bears to defend. For a shot at rotating this thing back down. 72s is the bottom of the key range here. That key trading range, we also have 70 as the previous year's low, and that would also be a return back to the March FOMC key level. That March FOMC right here overlays with the December FOMC. They're about a 1 tick differential, 70.43 versus 70.44. When that one was developed, you saw price take it bid here, rejecting up here at the 83.52s, and off of the 200-day, we could be looking at a round trip back to this point now up ahead. So again, this level up here, the upper end of the range, very important. That's about 77s. So to remain below 77 would suggest a continuation towards 70. 44 is up ahead. All right, let's take a look here at gold futures. Now gold has developed quite the narrow range here over the last couple of weeks. We went over now a 10-day narrow range. So 1, 2, 3, 4, 5. This is another 5. That's 10. Here is 11 now. 11 days narrow within this range here. That's quite the development. Again, that's enough to fuel over 100 points of movement up ahead once a breakout occurs. So right here you can see 100 points is the 125% target. That's an easy target here. Right now we're at 47 points. This higher high failure occurred right there at the 2060 level, dropped back below 2030, and has not been able to get back above that point ever since. So early this month, the first test up here toward 2030 could be very, very important. Any failure here, any lower high, could give you the look of a head and shoulder pattern that ultimately drops back toward recent lows here. 1940, 1960, those will be the first kind of key levels to get to. Through those levels, you start opening up a return to 1860, 1830. So this first pullback, if this is a developing head and shoulder pattern, the first test at this right edge over here could offer one of the best entry opportunities for a shot at pushing this thing down. So right now, watching this narrow range for expansion up ahead and watching for the first push up here to see how price responds. And lastly, heading into the new month of May, we have new monthly pivots. Higher value relationship here with a bearish finish. That's a bearish bias. That means the first rally tends to be sold for a push back toward the low and perhaps lower. All right, let's take a look here lastly at the YM. The YM has had a tremendous 2-day rally, huge 2-day rally off of year-to-date VWAP. This thing rallies back up 40 off the 33,300 up to 34,200 now, and this thing is sitting right here near the highs of the previous month. We still have a little bit higher to go get the 34,500 level. That was our initial target initially on this thing breaking back above 33K. Maybe we go get that up ahead, but again, keeping an eye on the previous high and close. Any reaction there could provide a return back toward the middle of the range, maybe even back down below as this thing continues to trade in this range here. All right, that is it for now. We'll see how this plays out heading into the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.